Morning to you. This is our Tuesday key market drivers call for the 27th of August. You see on the screen our contact info. If you're on the YouTube channel, we would love to hear from you. So let's get after it here. So I guess several things moving prices around this week. The US dollar, as you can see in the chart on the right, has kind of been in free fall. Why is the US dollar in free fall? Well, I think the biggest part of that is probably that second bullet there. Now, to your point earlier this morning, Scott, the U.S. dollar has been dropping since well before Powell's comments last week in Jackson Hole. He basically said, "Hey, time to pivot, time to start reducing interest rates." I'll give you the exact quote here on the next slide. But a lower interest rate environment means a lower value of the dollar. Money was actually flooding into the US because a lot of central banks around the world were cutting rates earlier than we were, which brings the money here because the yield's higher, the interest rate yield's higher. So the fact that the notion that we're going to start reducing interest rates here and the dollar falling is not a surprise. I think the reason that it started down the hill before we really had much confirmation from the Fed, which, by the way, we still don't, I guess, 100% have. But when the chairman says, "Hey, it's time we're going to start doing something different," that's a pretty good indication. But the reality is, I think the weaker the economy looks, the more we get these signs that inflation's coming to heel, jobs market's not quite what we thought it was, some other economic indicators showing that the pace of economic activity is slowing. The anticipation of cutting interest rates, and all of those things into one nice, neat little basket gives you what's really turned into be pretty much of a free fall. So remember, inverse relationship, generally speaking, between commodity prices and the value of the dollar. A cheaper dollar generally means a little bit higher commodity prices. Now, doesn't seem to be supporting the grains and oilseed markets much yet, but I think that's just because it's being overwhelmed by it's that time of the year. We got good crops, blah, blah, blah. So speaking of good crops, we will show you the ProFarmer crop tour wrap up and what they found, not only state by state, but nationally. We'll show you that in the slide or two. And then I'm sure a lot of you are waiting with or have been waiting for the resolution of the fourth bullet there, the Canadian rail strike. We have a question mark behind over. Don't know that necessarily needs to be there. It's over. The Canadian government has set the railroads back to work. Remember, I think it was the fourth offer from the railroads to the Teamsters Union when negotiations were still going on was to submit to binding arbitration. The Teamsters Union that represents these 9,000 plus workers said, "Nope, we want more money." Well, the Canadian Industrial Relations Board ruled on Friday that nope, back to work. You got to submit to binding arbitration. I think that's supposed to start later this week, the 29th maybe, is what seems like I read. So what was the disruption? I think one of the questions I got yesterday from a customer that honestly nobody seems to know the answer to, I guess you can't know it, is there going to be a work slowdown? In other words, are they going to drag their feet a little bit? Still don't know exactly how that's going to work. We'll have to wait and see. But both railroads are back to work. Talked to a couple big shippers in Canada. One of those big shippers actually got a CN switch last Friday, not a CP switch. Talked to a different one here yesterday, and they got switches from both railroads in and out of their plants. So it does look like the railroads are back to work. The general feeling here is that we probably didn't lose much, if any, canola crush in Canada, which I know some of our oil customers care about. Since the railroads here and the railroads north of the border were starting to shut down before the work stoppage last week so that they didn't have, stuff strewn all over the place that was going to get stranded, we probably cost ourselves, at least 4 or 5 days of transit time of any shipments that were in and around that shutdown period. Had another one of the big shippers in Canada tell me he thought it might end up being a week or maybe 8 days. So that gives you pretty good brackets, maybe 4 to 8 days less transit time or slower transit.
My guy at the UP thought, on this side of the border, a couple of days.
Yeah.
I mean, because they had things kind of pre-staged and had already embargoed cars and all of that. So they were kind of betting on the come,
Okay.
and so he didn't think,
Didn't think it was too
just
big
a little
deal.
bit of a traffic jam is all.
Okay. So there you go. That is the latest and greatest that we know on the Canadian rail strike. I guess I don't need to cover it on this page then. We talked about the dollar. We talked about the Fed share. We do have a couple big reports there, and I just noticed it. It's actually the September WASD that's coming up, not the August WASD.
Oh yeah.
But that's the first boots on the ground report. I don't remember how many thousands of USDA employees will be walking around in the dirt, counting and measuring and weighing.
1,000?
Oh, what I've heard, I think it's way more than that, but
Really?
yeah, thousands. A lot of fields to get through, man.
Yeah, I suppose.
But so that'll be an important report. The market will watch that. I would suspect that the expectations as we get closer to that report is for maybe yields to crops to get a little bit bigger than what the USDA showed us in August. I think that's kind of the trend. The old big crops get bigger. To quote our good friend Jim Crawford, it's only a cliche because it's true, right? And then StatsCan tomorrow actually will be out with their first production estimates of the season. That's tomorrow, and then we get out into the early days of September here. We'll get the July 1 stocks report, which will serve as our official ending stocks number for the canola crop. So for last year's canola crop. So there you have it. Let's talk about ProFarmer a little bit. So let me give you a little bit of how this works, because we're going to talk about some of the math here and what that number means. So the ProFarmer crop tour, we showed you the map last week. They aren't in the majority of growing areas in really any states. Maybe Iowa, you can argue they get pretty close. And they only touch 7 of the bigger producing states. So to try to extrapolate an average yield from those 7 states there's a little bit of artwork, maybe, and a little bit of math, because you hit 7 of the 18 producing states that the USDA reports conditions on.
They claim that they hit 70% of the growing area for both corn and soybeans. But to your point, they can't see everything.
Right.
And you can't do it in 4 days.
Right. And 30% is not insignificant of the surrounding stuff. And again, this isn't being critical. You can only hit so much. But basically, they're trying to extrapolate the rest of the stuff. I don't know if they use conditions in those states or.
They do use some weather in their calculations.
Do they?
Yeah.
So at any rate, they got a national corn yield a little bit below the USDA's August WASD at 181.1. They've got a national soybean yield at 54.9. That is massive. That is absolutely massive. I think their historical they would claim is plus or minus 1% on the corn, plus or minus 2% on the soybeans, because soybeans aren't done yet quite at this time.
Uncle Sam, by the way, is at 53.2, which was a way big record.
Yeah, that would be a record crop. I guess the message here, these plants, as we showed you in our agronomy minute here a couple of weeks ago, they're just loaded with pods, and that is potential. And the moisture that we're putting into those, the available moisture right now is just filling out the size of those beans, filling out those pods, adding weight. I made the comment to you guys 2 weeks ago that it wouldn't surprise me for this thing to be 54, 55. A little bit surprised that ProFarmer found, or at least reported, that much, but that is a pretty massive crop. So what does it all mean? Well, as is always the case after the ProFarmer crop tour, there are a lot of people that start analyzing the data and that they found. And if you look at, there's a Karen Braun tweet there on the left. Now, she's doing a production weighted average of just those 7 states, okay? The 181 I showed you is a projected national yield based on what they found in that 70% that they looked at, okay? Right. So not to be confused, Karen Braun here is not saying that they're low, that she's 184.3. She's just saying, look, the production weighted average in the states we went to is 184.3. We were higher than that in 2021. Their findings were higher than that. And if you apply the trend line to it, which is what this is trying to do over here, it would actually imply, because if you look at those same 7 states that they went in, the USDA August WASDE was about 200 bushels an acre in those 7 states. So this would maybe imply what she is saying, and what with this, I don't know if this is Bill's analysis. I know he sent it to us, but I'm not sure. I think it's his. Would imply that maybe there's a little bit of downside to the corn yields from that August WASDE number. So that flies a little bit in the face of the bigger crop gets bigger. I would be a little bit surprised if the average trade estimates going into the September WASDE are for less corn, but maybe we do get a little bit of an adjustment. Rick, I think what comes out of all this is probably more of an upward adjustment potential here on beans than corn. But
the thing that comes out of it for me is we got a huge crop.
yeah,
I don't care how you slice it.
that's a good point.
We're at the end of the road here, and we're splitting hairs on whether or not we're going to have 181 or 183 or 5 or whatever the hell. It's a huge crop.
That is an excellent point.
That's what I keep coming back to. And beans are even bigger.
Yeah. No, that is a great point. We can argue all day long about just how big it is, but it is a big crop. All right, enough about that. Probably have beat this to death already. Don't need to talk too much about corn. Corn market continues to give ground a little bit. My bias is that we've had decent exports on corn. The corn balance sheet is more than adequate. We're in the ample category. Some would argue bordering on burdensome. But you know what? This corn exports being solid has kind of kept us in the game here. My gut is kind of telling me that maybe not an enormous amount more downside from current corn prices, but that is a market bias. And remember, I'm wrong with some regularity, as is everybody in this business. So place your bets. What's the wheat market up to?
Well, you mean what's it down to?
What's it down? What is the wheat market down to? Scott, that is an excellent point.
Yeah, well, a week ago, I would have made a pretty good case for you that the markets were kind of looking for a bottom. We had that huge run up from the end of April through kind of the middle to the end of May, and then we went right back down very sharply in June. In July, we were still going down, but not as quick of a pace. And the first couple of weeks of August, it sure seemed like the market was looking for a bottom. Well, after last week and after yesterday, I can say that apparently the bottom is farther down. Right now, the tech support and that's a December number. The futures that you see on that top line there are September futures. So the December numbers, the tech support, probably 514. If it breaches that 514 level in Chicago, there is nothing on the chart that would indicate any support. We got to trade probably above that 537 mark again in the December to take away what would be a technical bear market. International prices really haven't changed. Russia still leads the world there. Consider that here in the States, our winter wheat is harvested because we're not getting any reports from USDA anymore. And on the spring wheat, somebody was trying to make some hay that we went down 4 percentage points week over week to 69% good to excellent. Oh my God. But guess what?
They cut the really good fields, I guess, because
we're already over the halfway mark on harvest. Next week, we will not get any condition reports from USDA. That crop is done. It's being harvested now, and it really looks pretty damn good. And it's going to be a big crop too. So nothing to worry about there. One little more thing to kind of paint a bit of a different picture on prices in the world. Matif is the name of I don't know what it stands for. It's French. So
I was going to say it's like those French have a different word for everything. Another movie line.
The Matif market is the Paris Futures Exchange where wheat is traded in Europe. Most of the wheat is traded in Europe. France is one of the bigger producers over there, as you know. And I've been kind of singing the tune about France here lately that, they've had bad quality. Their production is going to be down some 24, 25% from what it was a year ago. But look at what their futures market is doing. They're now trading well below $200 a ton. And remember, this is futures, not actual export values. 189.5. That's the lowest prices that they've seen since March. And that's down from a 275 number that they had in May. So
Does this say buy the rumor, sell the fact market?
I think you could probably make that case. Yet another cliche that we use a lot in this business. So again, I think that there's really nothing in the way of a fundamental a picture that would tell us wheat needs to go higher anywhere right now.
All right. So maybe your homework for next week needs to be to figure out what Matisse stands for.
That would be a good thing.
And be able to say it in perfect French.
I thought I was.
All right. Thank you, Scotty. Let's talk a little bit about the soy complex here. And I got a lot of stuff on this page. We talked about ProFarmer. We talked a little bit about Cordonnier. What I'd like to do here is move to the next slide. We've got a lot of veg oil customers. I guess before I go to that, the complex was up a little bit last week. I was asked already, well, why was the soy complex up a little bit last week? If you remember, they got the skids kicked out from underneath it the week before. And, you know, even the worst market doesn't go straight down. So a little bit of a short covering rally, I think, is all to say about that. So for our veg oil customers, I made the comment last week that it was just some of the bearish stuff that it seems to me like was in play, but that there was a lot of different variables that were out there that I didn't know that the market had built in and started handicapping yet. A little bit more on the bullish side. We see market pop up back here a little bit, but what else going on? Well, on the bearish side, we talked about this big soybean crop. We talked about the small refinery exemption ruling here a few weeks ago. We've got this CARB proposal to limit to 20% of feedstock. You can't get a carbon credit in the state of California if you have, for any gallons produced from a feedstock of virgin vegetable oil, i.e. soy and canola, above 20% of your total. That's bearish as heck, but it really doesn't take place until, if the proposal goes through, and it probably will, it doesn't happen until 2028. So we can put that on the something to be worried about later category. But when you look at the bullish side, there's a couple things here. First off, I want to point out, when you look at the whole slide there, all but two of those items, maybe three of those items, are government related. The ability to predict government policy, I believe, is harder than the damn weather to predict. So my message to our oil customers is, don't get too tangled up trying to figure out what the market's going to do, because you can't. You might get lucky and you might guess what the government's going to do, but this market right now is so incredibly affected by government policy that I think you need to divorce yourself from that when making decisions. I think the decision needs to be, does this price work in my business model, in my margin calculation, in my budget? And if the answer is yes, then you probably should buy it. Could it go lower? Sure, it could. Could it go higher? Sure, it could, maybe a lot higher. And that kind of gets me to the bullish category. We've talked about, there is a real move afoot in Washington, D.C. right now to get the USDA or EPA to limit the importation of imported feedstock, specifically UCO. There's also a big move afoot to take away the subsidies starting in 2025 from any imported feedstock. Now, I don't know whether canola gets caught in that dragnet or not. That would be really bullish. But we're not importing a small amount of used cooking oil. We're on pace to be over 4 billion pounds. So, you know, there's a lot of stuff going on here that can certainly affect the market. And remember, current mandates are only through 2025. So probably relatively early next year, we're going to start the conversation about what is the EPA going to recommend that mandates go to for 2026 and beyond.
You mentioned the imported feedstock and the subsidy restriction. Is within that same talk or legislation, there was talk about not only restricting the imported side, but then if you bring it in here, make it, and then export it,
you don't get the goodies either.
You don't get the goodies either. So does that kind of in the same?
It's a little bit of an offset. I mean, right now we are told that there is used cooking oil coming into the U.S., paying the import duty, being turned into renewable diesel, re-exported to Europe. Because you're re-exporting a value-added product, you can not only draw the duty back, but you can get the dollar a gallon tax credit. I would be shocked if that continues.
That the double dipping will stop for sure.
Yeah, we're basically subsidizing product that is going to Europe, which I don't think was the part of the original intent. The other thing I've got at the bottom on the bullish side, and this is what's got the palm oil market all fuzzed up, is Indonesian president late last week, made the comment that by 2026, they want to be up to B50. What is B50? That is a 50% biofuel blend in their diesel supply.
I thought it was 40.
Well, it was 30. As we speak, they're trying to go to 40 and hope to have a 40% blend in place by May of next year. Now they're talking about a 50%. So I guess maybe just shove some more chips on the table.
Why not 60? I mean, what are we stopping for?
I have no idea. Maybe they just have to have like a pause between press conferences. But at any rate, you can hear the skepticism in our voice, but who knows? We'll have to see where that goes. Which is actually a lot of what I was going to talk about on here. I've already talked about a good bit of this. So I think we will move on and let Jay tell us about the wide, wide world of dairy.
Oh, good morning, Dave. Yeah, dairy volatility is the big key
that's
right
an
now
understatement.
in dairy. So, what's driving volatility right now? Let's talk about milk. So we had the milk production report that came out last week, came out below expectations. So we're a little bit tighter on milk than what the trade thought. Then we had the cold storage report that was released on Friday afternoon from the USDA. And what did that tell us about stocks? Well, it told us that we have less cheese than we anticipated on a month-to-month change, and we have less butter than what we anticipated in the cold storage than we did the last month. So we're drawing, if you can let me paint you a picture, we have less milk and we're drawing down the physical stocks of products faster than what we anticipated. Thus, you get the market that moves. Yesterday on Monday, cheese was up almost a dime, butter up almost a nickel on the exchange, and milk prices. The milk prices that a processor is going to pay, I call it the basis. So the premium or discount relative to the board on the class, whether it's class 3 or class 4, they're extremely high right now, above the 5-year average, above last year's numbers. Last year at this time, we were trading discounts to the board on milk. Right now, we're paying premiums somewhere between $2 and $3 over the board price. The processors are paying that to pull the milk. Again, that's an indication that milk is tight. Why is milk tight? Well, it's hot out. It's summertime. We have less animals. We're getting less milk per cow right now. Some of this is seasonal, but some of it is an indication of we have less animals producing less milk. So with that being said, prices jumped up and jumped up pretty dramatically on Monday versus last week where we ended the week on Friday. But if there's anything consistent within the dairy complex, it's volatility. So when we look at overall demand for cheese domestically here in the US is okay. Butter demand remains strong. How do we compare versus international prices right now? Well, we're kind of in the ballpark right now. Cheddar cheese internationally is $1.94. So we're sitting at about, $2.14, $2.15 right now. Butters on the international markets about $3.04. We're sitting at about $3.17. So we're still higher than international prices, but not dramatically higher. So we'll see how this continues to play out as we move into the fall. Milk production seasonally starts to pick up, and we're going to have to watch the products report, the cold storage report, to get some sort of indication of what demand is doing. Is demand going up? Is demand going down? So we'll see how this kind of plays out going forward. But right now on these week-to-week changes that we talk about, because we record this every single week, lots of volatility right now in the dairy complex, Dave.
Jay, are we going to see, aren't we right on the cusp of seeing a couple of these big new cheese production plants coming online?
We are, good point. We have 2 cheese plants, a couple more starting up here in production in Q4. Interesting on the milk production report, we're starting to see the dairy herd expand and milk production go up. Specifically in the South, Texas. Texas has got one of the plants that's going to be starting production. So as you and I have talked about before, Dave, when we had the opportunity to visit a dairy farm, it's kind of a chicken and egg. You build the processing plant then, and then the cows start to fill in, and we're starting to see that around those 2 big new cheese plants that are going to start production here in Q4.
Yeah, that's what we kind of heard from that dairy that you were commenting on. I mean, his comment was they'd love to expand, but they need somebody to build processing, or they need to build it. And his comment was similarly on the other side of it. The whole chicken or the egg argument is these 2 big cheese plants didn't build it hoping that somebody would add cows. They've already got plans in place. So be interesting to see if we don't start seeing, like you said, the herd numbers are already starting to come up. We don't start to see production come up along with those plants and provide a little bit of relief. Wish we get somebody to build a damn butter plant.
Yeah. Yes, I agree.
All right. Thank you for that, Jay. And we're getting to that time of the year where weather is maybe not quite as important as it was a month ago. But Paige, what is going on the weather front to finish this crop out?
Yeah, that was kind of how I was going to start this off, but you can see that past 7-day precipitation. Looks like South Dakota got some good rains, and then there was a little bit of rain kind of out to the far east. And if you remember, that's kind of the area of the Corn Belt that's the driest. So that is helpful. If you want to pop to the next slide, I think they're even supposed to get some more rain in the coming week. I think last week it was 6% of corn production within drought. Now it's 7%. I don't think that's overly material at this point, especially this late in the game. Corn is done. Beans are pretty well on their way to done. I think if we could get another good rain across the Corn Belt, that would help things, but I don't think the lack of rain is going to hurt anything, especially at this stage of the game. We're kind of right on the cusp of starting to talk about harvest weather instead of conditions for crops and how it's benefiting those. I would say probably next week, especially when we look out at the longer term forecast, that we're definitely going to have more of a tilt talking about harvest instead of production. You can see in the next couple weeks should pretty much cool off across the Corn Belt.
Thank God.
I know it's been, I think yesterday our high here was 99. I don't even want to know what the heat index ended up being, but you can see in that 6 to 10 and 8 to 14 day, kind of a mixed bag when it comes to precipitation. But in that 6 to 10, if kind of that heart of the Corn Belt and to the east can get another rain on it, again, I think that would kind of benefit yields, but I don't think the lack of rain is gonna clip anything, if that makes sense. So not
I think the way
Cordonier
Cordonier put it is he didn't raise his soybean estimate, which is already 53.5 bushels an acre, because of some of this heat and dryness. So it sounds like he would have gone up again if it wasn't dry. So yeah, to your point, are we hurting anything? Well, maybe we could add a few pounds here, but we got to be getting close to done with the moisture that's in the soil, certainly around here.
Around here, absolutely.
Mm-hmm.
I can only imagine that it's going to help those very, very late planted beans. Remember some of those beans we saw up around Fargo? Some of those that were pretty short yet.
Mm-hmm.
They could still be helped, I think. But overall, I think Paige is right on the money. We might be able to add a bit. I don't think you're going to negatively affect the crop at this point.
Yeah.
Well,
and, next week.
I have
What's
two
that, Paige?
soybean fields right out my front door. One of them was planted kind of pretty much when everything else was, and one was planted pretty dang late. And I would say that they are the exact same size. So
Be interesting if you walked out there to see if there's as many pods on that late planted stuff, or is it probably still adding pods at the top? But I think next week, as we transition and we start talking about weather, obviously we'll still keep talking about U.S. weather because we've got a crop to maybe finish up, but really we start talking about harvest weather. But it is also that time of year. Remember, for soybeans and corn, we have a North American crop cycle and a South American crop cycle. So we're going to start winding down the U.S. as we get into and through harvest the next couple months. And then we will start immediately, probably next week, already start talking about central Brazilian weather, because they're getting ready to start planting their soybean crop.
Yep, they can plant beans in a lot of places on the 15th of September.
Well, yeah, and I think they changed that. It was always the 15th. They're trying to control the fungus rust.
The rust, yeah.
I think they moved that up to the beginning of September. So I believe that's in place this year too. We'll find that out for you as we get into this. So, well, thank you, Paige. Thank you for everybody for participating. I wanted to point out we got a next webinar coming up next Tuesday. I will probably be the color commentary. Scott will talk to you about our wheat flour 101 and the crop and the process of turning it from wheat into flour and all that other good stuff for our milling customers. So don't miss that. And as always, be careful out there.